Hey everyone, ready for another deep dive? Today we're tackling the U.S. stock market, trying to figure out what's going on with this wild ride it's been on lately.
It's a good question. A lot of people are wondering, should I buy now? Is it going to keep going down? What's the deal?
Exactly. So to get a handle on things, we're going to be looking at reports from CNBC, Fox Business, and we'll even throw in some Korean financial news just to mix things up a bit.
Always good to get different perspectives.
Okay, so one thing that keeps popping up in all these reports is President Trump and his trade tactics, specifically all these tariffs.
Right. Well, he wants to protect American jobs and industries, but it's tricky.
Well, CNBC had this really interesting point about how sensitive the market is to every little move right now. They said, when Canada briefly suspended their electricity tariff, get this, the market, quote, flew up like a spring-loaded cannon.
Wow. Spring-loaded cannon. That's a pretty vivid image.
Right. It really shows how volatile things are, doesn't it?
Absolutely. And that makes sense because you have Trump's aggressive approach, like when he doubled down on those tariffs on Canadian steel and aluminum. That sends a signal, but then you have the uncertainty of how other countries will react.
So kind of a mixed bag, and the markets don't like mixed bags.
Not really. Uncertainty makes investors nervous, which can, well, lead to more decline. And speaking of decline, CNBC pointed out some pretty concerning signs.
Yeah, things aren't looking so hot in some sectors.
No, not really. Small business optimism is down. The service sector is having a rough time. They mentioned Delta Airlines, Verizon, Dick's Sporting Goods, Kohl's.
Oh, yeah. Kohl's was predicting like a 6% drop in same-store sales, and Verizon stock took a hit too. I remember that.
Yeah, and it's important to remember that those aren't just numbers. They represent real businesses, real people.
Absolutely. It's people's jobs, their livelihoods. It's serious stuff. And this kind of feeds into the whole question of, are we heading for a recession?
Right, that's the big question looming over everything, and you can see how tariffs play into that.
Yeah.
They can lead to inflation, which means prices go up on everything, and that squeezes consumer spending, people tighten their belts, businesses suffer, and, well, yeah.
Domino effect.
Exactly.
And then to add to the mix, we've got Congress trying to figure things out. Fox Business had a lot of coverage on the House vote for that GOP spending bill.
Right, that one's aimed at preventing a government shutdown, which is crucial, but it's also gotten really controversial.
Yeah, they were talking about how it might impact different programs, and I think Elon Musk's name even got thrown into the mix.
Yeah, there were some pretty strong opinions on both sides.
They had these sound bites from representatives. One was saying it was like drafted by Musk's greed machine.
Wow.
And then another was saying, no, it's a clean bill that'll provide stability for the American people. Very different takes.
Definitely highlights the deep divisions and different priorities at play there.
And of course, all of this could impact the market too, more uncertainty.
Exactly.
Okay, so we've got tariffs, recession worries, and Congress adding to the drama. But before we jump into what this all means for your big question about the stock market, let's shift gears for a second and look at things from a global perspective.
Good idea. Sometimes stepping back can give you a clearer picture.
Right, so our sources from Korean financial news, they had some really interesting insights.
What struck me was their focus on President Trump's policies and how they're impacting the global economy, especially when it comes to these trade wars.
It's like they're watching this whole thing unfold from a different vantage point, noticing things we might miss here in the U.S.
Absolutely, and that global perspective is key because what happens in other countries, especially major economies, it directly impacts how our markets perform.
Right, it's all connected.
It is. It's a complex web. Everything influences everything else, and that's what makes analyzing the market so challenging, but also so fascinating.
And it makes you realize that trying to figure out where the U.S. market is headed means understanding how all these pieces of the puzzle fit together, right?
Precisely. It's all about seeing the bigger picture. And, when you start looking at the ripple effects of these tariffs, things get really interesting. CNBC had a whole analysis on the possibility of inflation taking hold.
Oh, yeah. And they weren't just talking about it in general terms either. They got pretty specific.
Oh, in what way?
Well, for example, they were saying those tariffs on Canadian aluminum could really drive up car and truck prices.
Makes sense.
Yeah, and they even singled out GM, saying a 50% tariff could seriously dent their profits.
That's significant. It shows how these tariffs can have a very real impact, not just on big corporations, but on consumers, too.
Right, like if car prices go up, everyone feels that.
Exactly. And what's even more concerning is the U.S. doesn't necessarily have another source for all that aluminum just waiting in the wings.
So it's not just the tariffs themselves, it's like the lack of alternatives, the potential for prices to spike across whole industries.
Yeah. That's a good point. It's definitely something to consider. And it makes you wonder, do the benefits of these tariffs, protecting American jobs and all that, do they outweigh the potential downsides?
Right, especially if it leads to inflation and ends up hurting other parts of the economy.
It's a tough question, a complex calculation with no easy answers, and CNBC kept bringing up how these tariffs are already impacting the service economy, which is,
A
well,
huge part of the U.S. economy.
yeah, huge. And they were saying consumer confidence is taking a hit because people are worried about those price increases. That leads to people cutting back on spending, which hurts retail, services, you name it.
Makes sense. If you're not sure what's going on with the economy, you're less likely to go out and buy a new PV or something.
Exactly. People hold on to their money a little tighter. And that brings us back to your question about whether now is a good time to buy stocks.
Right, right. With all this uncertainty, it's hard to know what to do.
It really is. And CNBC actually highlighted a bunch of different analyst perspectives. It's interesting to see how they're all interpreting the current situation.
So what are they saying?
Well, some analysts actually think this is a buying opportunity. Yeah. They're arguing the market is oversold, meaning stock prices have dropped more than they should have, and that we could be approaching a bottom.
So they're saying this downturn is temporary, prices will bounce back.
That's the idea. They even compared it to the early 1980s, back when Reagan's economic policies initially led to a downturn, but then ultimately sparked a period of growth.
So it's like a roller coaster. We're in a dip right now, but they expect things to go back up eventually.
That's the prediction. But of course, no one has a crystal ball. The market can be unpredictable.
Right. And CNBC did mention some analysts are predicting a recession, which, well, that's a whole different story.
Totally different outlook. And that's the challenge with trying to time the market. There are always multiple viewpoints. No one's got a perfect track record.
So how do you even begin to figure out what to do with your own money? It's a lot to process.
Well, I think that's where critical thinking comes in, a healthy dose of skepticism, too. You can't just blindly follow the headlines or take every analyst's prediction as gospel.
Right. Do your own research.
Exactly. Consider the source, evaluate the information, and most importantly, think about your own financial goals, your risk tolerance, what makes sense for you.
So informed skepticism is key. I like that.
It's about taking in all the information, but filtering it through your own lens, making decisions that feel right for you, not just following the crowd.
Makes sense. Don't just jump on the bandwagon.
Exactly. And remember, investing is a long game. It's about making decisions that support your long-term financial goals, not reacting to every little blip in the market.
Right. Don't panic sell. Don't get caught up in the hype.
Exactly. Stay focused, stay informed, and you'll be all right.
Okay, so we've got these analysts, some saying buy, some saying hold off. How about our Korean sources? What was their take on the U.S. market?
Well, what I found interesting was their focus on the global impact of these trade wars. They seemed particularly concerned about how it could affect the world economy as a whole.
It's like they're thinking bigger picture,
Yeah.
beyond just the U.S.
Absolutely. They were talking about how tariffs could disrupt global supply chains, create uncertainty for businesses all over the world, even slow down overall economic growth.
It makes you realize it's not just about us, it's a global system. What we do here has ripple effects everywhere.
Exactly. It's all interconnected, and that interconnectedness is a key factor to consider. When you're assessing the U.S. stock market, what happens globally will inevitably influence what happens here at home.
Right, we can't isolate ourselves from the rest of the world. It all feeds back in.
Exactly. It's a complex ecosystem, and understanding that complexity is crucial for making informed investment decisions.
Okay, so to recap, we've got tariffs, inflation worries, the possibility of a recession, global economic concerns. It's a lot to keep track of.
It is a lot of moving parts, and it's easy to get overwhelmed by all the information, all the conflicting opinions out there.
Definitely feels like information overload sometimes.
Right, and that's why it's so important to focus on the fundamentals, understand the underlying economic forces at play, develop a sound investment strategy, something that can help you navigate the ups and downs.
Right. Have a plan, stick to it. Don't let fear or greed take over.
Exactly, and remember, staying informed and engaged is an ongoing process. The market is constantly evolving, so your understanding of it should evolve as well.
So it's not just about making a decision today. It's about staying informed, adapting as things change, being a lifelong learner when it comes to investing.
Absolutely. The more you understand about the market and the forces that drive it, the better equipped you'll be to make informed decisions that align with your financial goals.
Okay, so we've talked about tariffs, a potential recession, global economic anxieties, even the political drama unfolding in Congress. But there's one more piece of this puzzle we need to examine before we can fully answer your big question about whether now is a good time to buy stocks. It's like we've been looking at all these big picture things, but what about the human element, investor psychology? I feel like that could have a huge impact on how things actually play out.
Oh, absolutely. You can't underestimate the power of psychology in the market. I mean, fear, greed, that herd mentality, all of that can really drive investor behavior, sometimes even more than logic or rational analysis.
Right, like people get caught up in the frenzy, whether it's buying or selling.
Exactly. And remember, the market is ultimately made up of individuals making decisions, and those decisions are often influenced by emotions as much as by data, that gut feeling.
So it's not just about numbers and charts, it's about like human behavior, which can be pretty unpredictable.
Exactly. And that's why it's so important to be aware of your own emotional biases, and to have a disciplined investment strategy, something that can help you weather those market storms without making rash decisions based on fear or, FOMO,
FOMO, fear of missing out. Gotta love those acronyms.
right? They're everywhere these days.
Okay, so having a plan and sticking to it, even when the market's going crazy, that sounds like solid advice. But let's be real, it's easier said than done.
It is. It definitely takes practice.
Because there's just so much noise out there, so many different opinions. How do you stay focused and not get swept up in all the hype or the panic?
That's a good question. It's about finding that balance between staying informed and staying grounded. You don't want to ignore the warning signs, but you also don't want to freak out over every headline.
Right, don't bury your head in the sand, but don't lose your cool either.
Exactly. It's about filtering the information, focusing on those fundamentals, and making decisions that align with your long-term goals, not just reacting to the noise.
So informed skepticism and a long-term perspective, those seem to be the key takeaways from this deep dive.
I think so. It's about being thoughtful and deliberate with your investments.
Okay, but let's get back to the big question. Is now a good time to buy stocks? Given everything we've discussed, what's your take?
Well, if there's one thing we've learned today, it's that there's no easy answer to that question. It really depends on your individual circumstances, your investment goals, your risk tolerance, how long you plan to invest.
So there's no magic formula, no one-size-fits-all solution.
Unfortunately not, but hopefully this deep dive has given you the information and the different perspectives you need to make an informed decision that's right for you. We've looked at the economic data, considered the political landscape, even explored the psychological factors that can come into play.
It's like we've assembled a toolkit for navigating this crazy market environment.
I like that analogy, a toolkit. And even though we can't predict the future, at least we've got a better understanding of the forces at play, the things to watch out for.
What I hope you take away from this is the importance of critical thinking, being skeptical, having a well-defined investment strategy. Don't let fear or hype dictate your choices. Do your research, consider multiple perspectives, and make decisions that align with your long-term financial goals.
Couldn't have said it better myself. It's about being an informed investor, not a reactive one.
Right. Don't just follow the crowd. Make your own informed choices.
Exactly. And remember, investing is a marathon, not a sprint. Slow and steady wins the race.
Great advice. Well, we've reached the end of our deep dive into the U.S. stock market. I don't know about you, but I'm feeling a lot more informed, maybe even a little bit wiser.
I always enjoy these deep dives. It's fascinating to explore different perspectives, see how all the pieces fit together.
And even though we didn't find a definitive answer to your question about buying stocks, hopefully we've given you the tools and the confidence to navigate this market landscape and make decisions that are right for you.
Absolutely. It's all about empowering yourself with knowledge.
Well said. So on that note, we'll leave you to your research. Stay informed, stay engaged, and as always, happy investing.